Looking for a diversified way to purchase closed-end funds? ETFs to the rescue. Hi there, I'm Scott Burns, Director of ETF Research with Morningstar. Joining me today is Ben Fulton, who heads up the PowerShares ETF group. Ben, thanks for joining me.
Thanks, Scott.
So, you've launched a new closed-end fund ETF, and it's a fund of closed-end funds, the first of its kind out there. Can you tell us about it a little bit, starting with the ticker?
Sure, yeah, the ticker, hopefully easy to remember, PCEF, so PowerShares Closed-End Fund, ETF. It's made up of about 75 closed-end funds, represented between option income funds, investment grade, and high yield, pretty much equally weighted between those three areas.
So what does it leave out? I guess that's the big question.
Well, for sure it leaves out all the municipal bond funds. These are all the taxable side of the equation. And it leaves out the single country closed-end funds that are out there.
Well, they could always buy another ETF if they want that.
Yeah, the ETF world has done a very good job in that area. So, you know,
folks are clearly interested in closed-end funds, and I think that's really being driven by this secular drive for yield, because we're basically in a no-yield environment. I know you guys just recently priced the yield on PCEF. So what did it come out at?
Well, it's a little over 8.25.
8.25.
Yeah. So it's high yield because you've got some leverage employed into it. So ETFs typically have not by themselves going to have leverage, but in this case here we're having leverage because the closed-end funds may have that. So it's an opportunity to, if you're looking for a yield play, or if you're looking at the closed-end fund space and you realize there's relative value there that you like, but you can't figure out which ones you want to own, this is a way for you to own what we hope is a higher yielding product with good representation across closed-end funds.
So why people generally like ETFs versus closed-end funds is because the ability, the ETFs trade very close to the NAV, whereas closed-end funds have that historical premium discount issue. As an ETF investor, does the fact that the things in the underlying in the ETF have premium discount issues, is that troublesome for the ETF portion of it?
Well, it could be troublesome if an investor does not monitor and watch that. I mean, you want to be able to look and see. But it's actually now hopefully going to be the easiest way for you to identify what is we'll call the broad market, the beta of closed-end funds. What is, how are they trading? Are they at a premium or at a discount? So it can be an opportunity. What I always say is if you can identify risk, then you can make it an opportunity. Right. Unidentified risk is definitely riskier portfolio.
Right. So can investors find the stats for what the average premium or discount is of the portfolio? Can they find that on the PowerShares site? The
PowerShares site's going to have some of the information. S Network, who is the index provider that created it, even has a more robust index site that can provide a lot more historical and background data on the index itself.
Okay. And, so far it sounds like it's been a tremendous launch, $40 million in assets in the first month. How's it been trading? Have the market makers been able to keep the spreads tight? Have the premium discounts been negligible?
Yeah, it's a little tighter spread than I thought we would see at this area, so that's always a good sign. Definitely a lot more trading, a lot more depth to market. We actually have a lot of market makers that are interested in the product mix. Or actually trading the product, so that's great news. That's actually been a big improvement we've seen this year with our couple of launches between BAB and then this one. A lot more market makers than we saw a year ago, so that's good news for the ETF industry.
What kind of long-term impact do you think this product can have on the closed-end fund market? Given that it's an ETF. And how that liquidity and that trading and that price discovery, I mean, what do you think if it's a successful product?
I think it's a successful product. One thing that there's always been this theory, and whether it's been the high yield area, maybe as we went into emerging markets for stock-based, but for sure maybe an inefficiently traded market like closed-end funds, which were typically bought and held within portfolios and not traded. We're hoping that a bright light on this area, that there is price discovery, and it actually helps maybe mitigate some of that discounting risk we've seen in the past, help closed-end funds trade better. So even if a person's looking to just buy and sell individual closed-end funds, the ETF may help provide a little more liquidity.
Over there. Yeah, and I think, we saw that, that's similarly been going on, even with large cap stocks. You can see what the spider does, in derivatives, the leveraged, ETFs for whatever criticisms they may have, they are definitely very liquid instruments. They trade quite a bit. So, I agree with you on that. I do think that this is an area where the ETF, the active trading, may change the outcome for everybody. So a win-win all the way around.
Great.
Well, Ben, thanks for joining me. And good luck with that fund.
Thanks, Scott.
I'm Scott Burns, Director of ETF Research with Morningstar. For this and other ETF news and commentary, please check out the ETF Center on Morningstar.com and the ETF Investor newsletter.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.